Have you seen this scary, scary chart? Right now, the NASDAQ looks almost exactly like what it was back in the 2000 dot-com bubble crash, right? You've had these, see the green arrows? Couple of pivots, bounce up, make a high, and then come down, make a second lower high, and then boom, that's it, finished, lights out. This is exactly what's happening here. 3 green arrows, bounce, bounce up, right? Makes an all-time high, comes down, makes a bounce, right? Nearly makes it back to the high, and then is about to pivot down. Do you think that's what's happening in the markets right now? And who could have warned you about this? Okay, here was my Twitter on the 29th of July, 2 months ago, where I said NASDAQ looks like there's a big pulling back is coming because Microsoft, Tesla, they can't rally even on earnings beat, even on good news, right? And I go on to say the SP 500 NASDAQ are in trouble right now. And it turns out that was the exact top for the NASDAQ, or the QQQ, the NASDAQ ETF, right? Look at these two moves down since. And then, of course, a month later, I followed that up. In early September, in my own Discord, I said that I do think chances favor the QQQ or the NASDAQ ETF to do a second leg down, right? The C leg of an ABC pullback, right? To short the QQQ. And of course, that's exactly what's been happening here in the NASDAQ, right? We see the ABC, that's what's called an ABC pullback, but it hasn't hit bottom yet. It's ready to bounce. Well, the answer then we need to look at the reason why NASDAQ has been falling like this. So basically, there are a number of key reasons. It basically all comes down to inflation. What's driving inflation and what's driving the Federal Reserve's interest rate expectations. Now, we have seen that oil prices, check your charts today, oil prices are at $94, $95 now. This is higher than even what I predicted. I saw 2 months ago, I said probably 92.8 would be probably like a local top. It's blown past my resistance, my expectations. So what that means is the headline CPI inflation should be rather high in the coming 2 months or even 3 months, right? If that's the case, then obviously interest rates could go even higher and QT for longer. And basically that means that US 10-year yield, US 30-year yields, and due to other reasons, are also spiking up, hitting 16-year highs. When US 10-year yields are hitting 16-year highs, so of course, right, bond yields are hitting huge highs, then big money flows into the United States, and that pushes up the US dollar. This has been an amazing rally in US dollar as well, both of which I have warned about, right? So this is basically means risk off, and that's pushing down the stock market. However, be very careful with all the shorts here, because right now the market is in extremely fear territory or close to it. When others fear, that's when I become greedy, right? So I might actually cover my shorts sometime soon here, depending on the situation. It is not the time to go in short, and I'm looking for the market to bottom probably sometime soon, next couple of days or next couple of weeks, depending on the situation. Look out for my updates.